Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Hope everybody's having a pretty good evening. It's good to see you, Aaron. Also, just want to give a shout out to everybody in the recording. Just want to say hello to you guys and welcome you to our COT report class. Excited to have you here. Awesome. So yeah, we'll go ahead and jump into this. So let me share a disclaimer as we're getting started. So as always, I just need to remind you guys about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So be sure that you're managing your risk, how many pips you're risking on each trade, how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. Perfect. So good stuff here. Tonight's COT report night, but I think it would be awesome to share with you guys kind of an update because I know some of you were in the bankers close class this morning. So I just want to show you that trade real quick where I'm at. So I'm up on these trades 78 pips. I was up a little more just a second ago, but I haven't closed out of a lot of these. But I'm really glad you guys are here because this is an interesting trade. This happens every once in a while with the bankers close trade. So a lot of the times during this hour, you'll get like this break in the upper Bollinger Band, and that's a signal to go ahead and start selling. But sometimes it's not necessarily like a runaway trade, but the market will like to fade up for the rest of the day. And then it won't be until later in the day, like right now, actually some of these targets might hit here, just with that most recent impulse down. In fact, here they go. This happens like clockwork all the time. And I would say this type of a trade happens maybe I don't know, once a week, twice a week, this happens. So it's often enough that we have to talk about it. Obviously, I don't like it when the market does this, but we have to work with it, right? So a couple times a week here, I'm surprised those haven't closed yet. They're right. It's touching my take profits. You can see that right there. Any second now, some of those should hit with that most recent push lower. Anyway, I'll just let them do their thing. But in my experience, and I mentioned this morning, wherever the bankers close hour starts, wherever the signal starts. So we got a signal, I think around here to go ahead and start selling. The market will at least come back within 12 hours to wherever that started. So that would be like right here. And we're pretty darn close to that. So it basically builds this bubble and it chokes everybody. I talked about that this morning. Everyone gets choked up here and no one's comfortable. No one wants to be in this trade. You're like, here's what happens. And this happened to me for years. I would take these shorts at the end of the day and I would sell up here or even sell down here and wait till it got up to here. And then I'd be like, oh man, I don't know how much longer I can take this. You know what? I'll just close the trade for a loss. And you do, and then you come back, 6 hours later and you find out this happens and you would have made your money back, right? And that's exactly what's happening right now. I don't know exactly why it happens and why some days it plays out like this. That's a mystery to me. I think it's just some manipulation, but I've just learned how to respond to this. What do we need to do in order to take advantage of this? How can you and I make money with what we're given? And this is the situation. So not every day is going to be like this where you have to wait, for that bubble to burst, which now it has. In fact, I'm going to close out of some of these manually just because we're at a really good price here. So what I like to do is close the worst price trades. Oh, it looks like I still have 2 trades on the pound franc. I didn't know that. Close the worst price trades out first. Just a couple of them just to kind of lighten the position up. And then I like to leave the rest of the the rest of it to ride to their take profits and or stop losses. But so basically, this is a manipulation bubble at the end of the day. So the market still wants to complete its banker close. It still wants to come down. It wants to pull back. But sometimes they're going to hold you hostage. They're going to hold all the shorts hostage up here out to dry all afternoon. And only those that are strong enough will be patient for this move. And this is the move that we were waiting for all day, and we just got it. I haven't moved mine to break even yet, but at this point, since we're pretty close to our targets, you definitely could. You definitely could bring your stop losses to break even. This afternoon, I wouldn't have done that just because, you know, we were still stuck up here. So they put us up on this plateau up here all day, again, just out to dry. And it wasn't until this evening where they finally said, you know what, here you go. You can have this, right? Again, I'm still trying to figure out why it happens this way, but every day I see this. I mean, like not this exact way, but multiple times a week, your trade is going to play out like this. And so that's why when you guys see me in the webinar, you're probably like, why are you still adding to this? And I'm like, because it's all gravy, man. Like everything up here, you know, anything in this hour that's created or even past the hour is all manipulation, right? And if there's no news constituting this move, you're going to get a pullback, you know, in the next 12 hours or so, just to a median, which now we're pretty much back to it. So yep. And I'm still holding most of these trades because I do think it is going to go down a little bit more. Not much more, but yes, I do think it's going to go down another, let's see, from here to here. I mean, it's only like what, 3, 4, 5 pips. That's how much more I think it's going to go. I'll leave maybe 2 or 3 trades on just to see if they can get down to here as more like bonus trades, but that's not where the most of the money is going to be made. So, yeah, not every day is like that. In fact, we traded this one yesterday for the banker's close. And let me show you that one. This one was different. Here's the banker's close from yesterday. Boom, right here to here. And if you zoom in, this one is what most days look like. You know, 3 to 4 days of the week. It's going to look like this. So you get a new high of the day right here. And then the market just kind of pulls back. So you're selling when that upper hits that upper Bollinger Band at the top of the hour. And then you're just holding this, you know, throughout the day or till it gets to the lower Bollinger Band. We held most of this throughout the day. And yeah, so by the end of the day, you know, afternoon, this thing had pulled back all the way to here. So pretty nice ultimately. And that one didn't have a huge drawdown like at all. There was really no drawdown like at all with that trade. And that's how most bankers close turn out. But again, you can't just, I guess, I mean, you could just be like, you know what, I'm okay losing on the other days, so I'll just use a really tight stop loss. You could trade it that way. But since I know how to make money in any of the market conditions we just mentioned, so like it's either going to look like this, like I just showed you, or it's going to look like this other one, like today. Obviously, today is a harder day, but you can still make a lot of money with it, right? So I would rather, for me, tango with the market. I always use that word, like you're tangoing with the market, saving that gunpowder to add at these higher levels because everything is gravy beyond that hour, as long as subject to no news, 12 hours before or 12 hours after, and that break in the upper Bollinger Band or lower Bollinger Band. That's a signal to go ahead and just get after it. So But yeah, so now these trades are close, most of them are on the cusp of closing right here. We're just waiting for, actually a few of them just barely closed. One more impulse lower and those take profits are going to hit. Most of those are going to hit. And that will complete our bankers close trade. So this was kind of fun to have a class. I know we're supposed to talk, we'll get to the COT report in just a second, but it's kind of fun to come here and see this play out. And I do want to make it clear that even though this was uncomfortable, this move, it's all according to plan. And so the key is, do I understand and how can I help you understand how this is going to play out? And again, I hate it that it happens, but it is part of the manipulation. But the market's going to leave you out to dry once or twice a week up here at these high levels, and you're going to be sitting on a drawdown for part of the day. But if you can have that patience to wait for this guy, that's where you're going to make your money, right? All right, so let's talk about the COT report. That was kind of fun to see. All right, guys, so COT report, I have it pulled up right here. Yeah. So this is, and a lot of you guys have used the COT report before, but it's really important to understand the context of the COT report, what it's for, and how you could potentially trade it. Just as a reminder, what the COT report is, it stands for Commitment of Traders. It's a piece of data you can get from the cftc.gov website. And I'll show you how to get it. This Excel spreadsheet of mine, which I will give you guys this link, I'll put it in the chat box. You guys can have that link and come in here. When you come in here, you want to go to the dealer page. That's where I update this. In fact, I need to change this date. Yeah, it needs to say 10/18, 2022. Perfect. So, yeah, it shows you the commitment of traders, shows you where the banks are buying and where they're selling. Now, does this mean that you'll make money with this every day? No. Does it mean that this should be used for scalping? Not necessarily. I wouldn't say it's the most reliable method in terms of scalping, but it is a very reliable tool in terms of picking an overall direction over several months at a time. Okay. But the drawdowns with the COT report can be pretty wild. Okay. Like you can have hundreds and hundreds of pips of drawdown on certain trades. So I'm going to give you some tips and tricks on how I would trade, how you should go about using the COT report so that you don't get yourself into a lot of trouble. And so not just not in trouble, but how you can thrive with it. So first of all, let's talk about some of these numbers on here. There's a lot of stuff on here to look at. And the stuff you really should focus on is really just the percent long and percent short. And this shows you, out of all the positions outstanding in the market, how many of them are long positions. And then subsequently over here on the short side, how many are shorts, right? So if you look right now, 90%, almost 91% of all the positions held by these big banks on the euro are short positions. So right now, euro short opportunities are abundant, and you should be looking for opportunities to sell the euro. Okay. There's a lot of other currencies out there that are being bought, like the Aussies extremely bought, pounds bought, Kiwis very bought, CAD, franc, and yen are all bought currencies. But however, the most bought currency is the franc. The speculators in the banking world have a huge interest to buy francs right now. So with that in mind, since we know the euro is most shorted and the franc is most bought, a subsequent trade setup would be to sell the euro franc. Now, most recently, the euro franc has been on a tear to the upside. Is that going to last forever? No. At some point, these banks are going to get their way and it's going to go on a multi-month long spree to the downside, and they're going to have a lot of fun with that. So how would you enter safely on a trade like that? So since you know that's what the banks are doing, and there's alternative currencies you could trade. You could trade the Euro Yen short, you could trade the Euro Kiwi short, Euro Pound short would be a good one too. All of them would be good options. But let me actually pull up, let's actually go over here. Oh, nice. We had several other trades just close. That's awesome. And then we'll see, you know, it might come up again. We'll see. But yeah, it just looks like we had a lot of trades just barely close out. All right, let's actually go to a hourly chart. I'll give you a couple of, actually there's a couple of ways you can do this. So obviously pull it out, and on this hourly chart you can see like 2 months worth of trading information here. This will show you kind of like where things have been, you know, where things are going. Like right here, this is a nice little trend line. Maybe draw things like that out. You can see, you know, this is a little bit of a channel going on right here. Channels are great, especially on higher time frames, because ultimately when these channels are done, in my experience, most channels will wind up, you know, breaking down. At some point, they'll break down. I have seen many of these actually break up first. So they'll actually go above the channel, hang out up here for a little bit, and then break down. But ultimately their fate is to be lower, which would coincide with the overall banker's signal on the COT report. Now, I don't want you guys to just like imagine, let's put it this way. Let's just say, oh man, hey, COT report this week says to sell, you know, beginning of October, which is right here. And you sell, at first you'd be feeling pretty good, but right now you'd be like, dang, I'm down, right? Because if you had sold right here, at one point you'd be up 145 pips, but then today you'd be down like 145. Okay. So some potential entries of how you can go about this are, I like this one. If you go to a daily chart, since you know the banks want to sell this ultimately, what you can do is go to a daily, and there is going to be a point when you're going to hit that top, and just the risk to reward on this is going to be amazing. You can see, well, I guess you can see over this last year, even couple of years, they've been selling this quite a bit. My guess is you can see it's coming up against a lot of resistance up here. So my guess is that's another reason why they're selling the Euro franc. It's because we're coming up on a lot of that stuff. But you can get, even just selling down here, you can get burned pretty hard. So let me give you a little tip. So if you come to the daily chart, it'll break down each candlestick. What I like to do is when I'm COT report trading for an entry, you can zoom in on these daily candles because each candle represents a day. So if you wanted to take a swing trade, you wait until the close of the previous candle, and you can put an entry. Like for me, I could say, hey, I want to sell. This is how you would avoid some significant losses with it. You take the body of the daily candle, of the previous closed daily candle, and you could put an entry to sell just below that. So right there would be a sell. Let's say that day didn't exist and we go back 2 days. At the bottom of this one, you could sell if it broke below that. It didn't. So next, you go next day. So you'll have a lot of trades that just never trigger, but that's much better, is to never have a trade that triggers for a while than have these big losses, right? So and then you could, you know, previous day you could put a sell there. These are all sell stop orders, you know, right there you could put one. You know, you could put one here, maybe that, I don't know if that would trigger, maybe it would. Oh, and then that's the other thing that you're doing, is you're just putting a stop loss at the other end of the candle, right? So, you know, let's say you enter there, maybe you lose 20 pips on that guy, right? But you're just keeping these tabs, you know, hey, I'm losing 20 pips on this, but hey, when this thing's finally going to fall apart like it should, you know, you're going to make, you know, just from here to here, that's 124 pips. If it comes back down to here, you're going to make 240 pips. So yes, you might take some smaller individual daily losses, but then when you finally get your runner, it's going to run for hundreds and hundreds and hundreds of pips in your favor. That's the ultimate goal with the COT report. So yes, the banks are going to get this right. They're accumulating a very long-term trade here. And our job is to be ready to go. And then that could continue for months. Like you could have, I mean, you could catch a wind like this and go 300 pips, or, you know, you go back even further. Let's see, from like up here down to here, another 300, almost 400 pips. So yeah, when you finally get your winner to run, it's going to be a huge trade. The hardest part is not going to be taking the trade or executing the trade. The hardest part is going to be, how do I hang on when I'm up 100 pips, but I got to go for 300 or whatever, you know, or whatever the signal says. And that's the thing about exiting on the COT report. I don't really even exit unless the COT report says to exit. You know, if it says to continue to sell, well, you got to keep selling, right? So it's kind of a longer term wealth strategy. I mean, it is very much a longer term trade, but you can see over the last month, I would say, selling the Euro francs has not been a profitable venture. You know, it's not been a good thing to sell. But overall, if you build this position and know how to enter methodically, it will be ultimately a good trade. The other thing that you could do, here's another trade idea, because you know you want to trade this and the banks are selling this. You could every day every day, just like you would invest, let's say you invest into your 401k at work or your IRA. Every week you put in $100 and you don't care, or you don't even know what the market's doing. You don't know if the market's up, you don't know if the market's down, but you're just contributing $100 a week into your pension or to your 401k. You could treat this in a very similar way. You know, hey, this week I put, you know, one micro lot in today. Tomorrow I put in another micro lot, and just every day you're putting in a micro lot. And then over a month's time, you've got kind of a larger position built up. And then eventually, you know, you get that final, you know, the market finally swings your way for the next couple of months. All the while you're adding to that trade every single day. And then, you know, 300 pips down the road, you've now got, you know, 60 different trades, 50 different trades priced in at all different prices, and 300 pips per trade, right? Super small trades, right? Like these are micro contracts, but nonetheless, it's still, you know, that is a valid strategy. That's something you could consider. That one could be really fun, honestly, like that version, because you're just kind of like, it's an aggressive investing. You're, instead of contributing to your IRA, you're almost going in with this, like, hey, I'm going to invest in this for the next 3 months, or 2 months, or however long it is. Sometimes it's just a few weeks. And then just every day you're putting a single micro contract in, waiting for the market to do what it's going to do. So that's another trade idea. If you're more risk adverse and you like that more clear-cut, precise entry, I would probably go with the daily candle option, where you're just entering when it breaks the previous day's candle body low in the event that you're selling. If you're buying, you're going to put a buy stop just above the previous candle's body high, and then a stop loss just on the other side of the candlestick. So you will have more losing trades, but they'll be very small losing trades. if you go that way. Like the pip losses will be really tiny in comparison to what you're about to gain. This is the type of trade where you're looking for a 1 to 10, a 1 to 15 type of reward to risk ratio. It's, pretty big return overall. All right. So those are some methods of what you could do. You can let's go look at some of these others. There's a lot of currency pairs that have gone up and against their current signal, but ultimately will find their way where they're going. Like you could look at the euro yen. I think that one's been up recently, if I recall. Let's take a look at it. I think it's been up. What's the euro kiwi? Let's check here. Yeah, so we have a short opportunity here. Right now, actually, these are all so close. Like, these are all so close. I can tell, like, for example, even on this daily, this is a wedge pattern. Again, I'm not the biggest guy into patterns, but hey, you do have a little wedge going on here. This is ultimately going to find itself breaking down ultimately. And we've got the banks looking to sell this as well. So, I would probably come in here and do the same thing. Just, look at each daily candlestick, see if there's an entry possibility on each one. This is kind of interesting. Like with this one, you'd actually still be in a trade from the other day. Like, for example, let's say on this close of this candle, you go ahead and put in a trade to sell. You're going to get wicked into that later that day. And then you would have a stop loss up here. And you'd actually still be in that short, which is probably fine, but just an interesting observation to make. Okay. But yeah, so you could trade it that way where you're just kind of farming the market, waiting and just kind of building it. The other thing you could do is just simply like, hey, the signal's been here to short this. Just every day put in a micro contract, just tiny trade, and over 1 to 2 months, you're just accumulating. And honestly, I like that one because that's, to me, is more what the banks are doing, because we know that they're constantly accumulating and they're not letting go of this position. I would just accumulate with them, just build the position with them. But again, super small contract size. These are such small contract sizes that they cannot affect your account, your ability to grow. Now, if you don't have like a really big account, let's say you're just trading with couple $1,000, maybe a micro contract is kind of a larger amount of money. So in that case, you might have to go with something like the sniper approach, where you're just placing, a trade around the daily candlestick type of thing with the COT report. You could do something like that. This guy looks like he's super close to close. Like I've seen a lot of these. If this pulls one of these where it breaks a little bit higher, it's only a matter of time before this happens, right? I've seen that happen so many times, time and time again. So this guy's on the cusps of a big move lower. And even if it's not huge, look how much is look at the probabilities here. Last time it pulled back here and here, those are pretty big moves. This is kind of the expectation if they were to pull back at minimum, which is, that's 800 pips, folks. Right? And this guy's 1,000 pips. So yeah, 1,000 pips on a micro contract. It's only what, $100 gain, but that's really great for a longer term trade that you're not actively managing. You're just putting it in on something that's very probable. Okay. And again, if this market wants to break above its little channel, game over. It's game over. It's coming right down. So yeah, that's awesome. So this is another option. I actually really like that one just because of how it's set up. And then the other option, yeah, the Euro Kiwi short, solid. Let's go take a look at that real quick. Oh, actually, before we do that, it looks like we had a couple more trades close from our morning trade this morning. Yeah, had a trade or two close just barely. We'll take a look at it. Nice. Yeah, so it is starting to break down a little bit more. And again, this usually will break down to wherever the banker's candle, or not banker's candle, banker's close started. So, or excuse me, where the signal initially was, which I think our original signal was about right here. Yeah, we're almost there. So again, this is why I short. I said this morning. This is why I short and I choose the short direction with this type of a trade. A lot of people are like, man, you're crazy. Why are you selling? It is clearly going up. Like when this is all you see and you're like, Steve is still selling. What is he doing? Why is he doing this? Crazy guy. He's gonna lose all his money. No, that's why. That's why I short, because I know what's about to come. And if I buy, let's say, okay, let me put it this way. If I chose the buy direction, maybe I would get an immediate reward. I'd make money buying immediately, sure. But let's say I forget to close, right? Or I want to do that same concept where I'm just milking the trade at these higher levels. I can't really do that because if I'm buying up here, I don't know if I'm going to be able to get back to this price. I don't know. This is very new resistance versus I know there's liquidity down here. There's a lot of liquidity and there's a lot of active players who are going to want to touch these levels one or two more times before the market goes up again. If it goes up again, we don't even know if it'll go up again. But again, this is why I choose this direction. And I've done this, I've taken this trade countless times. I think I've told you guys, I've been trading the banker's close for about a decade. I'm 28. When I was 18, I took my first banker's close trade. So yeah, it's been over a decade since I took my first, and I've seen a lot of different market conditions. I've seen this play out in a lot of different ways. I've been burned many times in the past when I didn't really know how to trade this, but I have a pretty good grasp on the market, and that's why you see me trade the way trade this the way I do this. However, there are a lot of different ways you can trade this. As you know, like I said, the other day you could have just sold immediately with no drawdown and it would have made money. Today, we did have a drawdown. We were stuck in a bubble all afternoon. Once that bubble burst, boom, we got our money back. So now tomorrow, when you come and do this with me, a couple things I want to just a little disclaimer on this. I don't want you guys to feel so, because I'm very confident, right? But I don't want you guys, and I did make thousands of dollars on this trade this morning. I think I told you guys I made $4,600 on the Tokyo close last night. I think I made $3,000 or $4,000 on this alone on my other account. Um, um, so I don't want you guys to be thinking like, oh man, I got to do what Steve's doing. I got to put a $3,000 trade on here. What I want you guys to master right now is consistency. I want you to understand and have a really good grip at what we are doing. Just understand the concept. I want you to fall in love with the concept. Do you get it? Okay, great. You get it. That's when you can go ahead and start taking some bigger trades, but you have to work your way up to that point. You will get there. You will start taking those bigger trades. But for now, just get hyper focused into this whole concept. It'll make so much sense as we go, as you take more and more trades. And because you have to, one last thought, sorry, I'm saying a lot here, but you have to experience every type of market condition. And I really mean that, because In this market, every day is different. I wish it was just peachy, like every day, like you could just go in short here, buy there, boom, you're done. It is not like that every day, as you guys know. So I need you to experience the days where it's super easy and the days where it's kind of not easy, right? I don't know if you guys remember this morning, we took 2 trades. We shorted the pound franc. Within like 10 minutes, we made our money on that trade. Boom, we were done. 10 minutes, 15 minutes, we were done with that trade. This one took hours. It's a different market condition. Do we know how to trade it? Yes, we know how to trade it, but it's going to require a little more time, a little more sacrifice, a little bit more nimbleness. You have to be a little more articulate with the trade, a lot more management. I actually kind of like it. I know it's kind of frustrating when you're up here all afternoon. Trust me, I don't know about you guys, but in the afternoon, I'm thinking about that a lot. Like I'll go on a walk in the afternoon. I'm like, I'm in a drawdown. I got this trade. It's down right now. And it's kind of hard to focus on your other things. Like I'm trying to get more people in our program that I just started the program up again. I'm trying to round up more folks to come to these classes and stuff. And sometimes it's kind of hard to like mentally move that trade out of the way and know like later I'm going to get what I want, but like no, like right now you're losing money, I'm losing money, at least for now. But I have to have that know-how and that willingness to like stay with it. So anyway, when we get more folks into the program, hopefully you guys can help teach the newbies. Like, hey guys, trust Steve, he's got this. Like this trade's going to work out great. Just be patient. I mean, and there will be several times, one last thought, sorry, where sometimes every once in a while, this is not going to work out. And we are going to hit our stop loss on that, right? And so if we hit our stop loss, so be it, but we're going to have to deal with that. I think the last time I actually hit my stop loss on a banker's close trade was like 2 or 3 months ago, maybe 4 months ago. Just because I understand how to trade this, and I've traded this so many times that I'm able to squeeze out the pips if you learn management. Okay, management will cause you to not hit your stop loss very often, versus like, or you could adopt a different trading style like the one we just told you about on the COT report, where you're like a sniper. You're putting in trades at different levels, like around the daily candlestick. Those types of trades are great. You're more of like a trader, but not like a money manager as much. You're just kind of like, hey, here's my trade, boom, boom, bam, done. Versus what we do in the morning is management. And I really like that because most days I'm making money in the market when I'm just a manager instead of a trader. I'm still a trader, but I hope that makes sense. Anyway, guys, so let's go back over here. I think I was going to show you the Euro Kiwi. So this guy has also been going up a lot, I think. Let me double check. I think this one's been up a lot recently. Maybe it hasn't. It's taking a second to load here. Well, not as much as the other ones, I'd say, but still it's been up recently. This is another one that the banks are selling quite a bit. So you can zoom in here. I'd say now is not a bad time to trade. Same type of thing. You can look at, you could do that concept where you're just adding a micro contract every day. Every day you're adding as long as that signal exists. The other thing you could do is, just zoom into the daily candles, just surround each candlestick with an entry, an entry to sell there, one there, you could try there. And if the trade never sets up, like if it never triggers in the next day, what you do is you just cancel the previous trade. It's a no trade. And then you set up the new trade for the next day. And then you put your stop loss above those candles, at least the most recent day's candle, and then you just let it ride. Again, that type of trading, you're not going to go 3 months without a loss. You're going to go like every other day, you're going to have a loss, right? Or maybe, who knows, maybe most days you're going to have a losing trade with this model. But your reward to risk ratio is going to be absolutely insane and awesome. There's kind of like a trade-off with that in my experience too. Like the bigger the reward, the more often you hit losers. And it's the same thing with most strategies. If you have a small reward but bigger stop loss, your win rate's going to be super high. So you have to find a way to achieve that balance between risk to reward. And a lot of it comes down to, well, how successful is your strategy? Do you actually have an edge in the market? Do you know what you're doing? I think we do, because with the COT report, ultimately, the market is looking to go that direction at some point in the next, couple weeks, couple months type of thing, and we'll stay in that direction for several months. So yes, I do think we have an edge that way, but there will be many days, like, for example, on this move up, you're not going to be getting a lot of very successful trades. In fact, you may have a lot of losing trades, and you're going to have a heck of a lot of no trade days with the COT report during this move to the upside, right? And you're going to have to wait until the market actually is ready to trigger you in, and then go from there, type of thing. So like I said, it's all dependent on what you want to do. Like, do you want to add a trade every day? Really small trade, kind of depends on how big your account is. Or do you want to trade the COT report more as like an entry through the daily candle? And that's just one of many ways. Let me go back here. It looks like our trade's close to triggering again, like we're close to hitting some targets. I like doing this because it creates it creates an income over time, and it's always fun to have some really big trades. It's super fun to have some trades that are up to 300 pips. Those are fun to show off and be like, yeah, I got this trade. I'm up 300 pips on it. It's really great. But in my experience too, like, I can just as well, I'm not saying it's bad, not discounting it, but like, I can go into the banker's close, take a trade that's going to make 10 pips, 20 pips, like this one did this morning. I can make, a couple $1,000s on this trade setup. And then maybe only make a couple $100s on a longer term COT report trade. Still worth it, still fun, and it's nice to have some diversity in what you're doing. But when I'm actively managing, I feel like I can make more money. And it's just my preference. But yeah, it's nice to have lots of different things that you're doing in the markets, not just one thing. So, all right, I think I'll leave it to you guys just to give me some questions if you have any questions. If not, we can go ahead and wrap up. But we're pretty darn close to closing on these trades. Let's see, did it? Let's see, where's the 3 p.m. bar this morning? 3 p.m. GMT right there. So yeah, we should be, I'm glad we've closed out of most of these trades, but yeah, one more little push lower and we are done with these trades from this morning, which is super awesome. Super awesome to see that. Okay, so yep, just and then like I said, just leave these. If go ahead and close out most of your trades from this morning if you haven't already. If not, I would leave just a couple of trades on here just to see if they can, make another push lower. I think they will. But yeah, I'd get out of most of those by now just because we're pretty much to where we started the day, and everything above here was just that bubble move. So hopefully you had several trades up in here that you were able to get into as well to make your money. And then, yep, we'll have a class tomorrow morning, same time, 11 a.m. Eastern, 8 a.m. Pacific. we'll do our bankers close in the morning. So real quick, just for fun, and so you guys can see the lineup for news. Obviously, we don't trade the bankers close if there's news, right? At least on the currency that we're going to trade. So we should probably get out of the euro. Actually, this is good to check right now. There is some euro news tomorrow morning. So in the next 12 hours. So we should probably close. In fact, I probably will just close several of these. I might just leave one or two on, or a few of these on, but there is some news tonight, or in the morning rather, on the euro. So we'll probably want to close out of the rest of these. I'm just going to let these four try to hit, just kind of increase that, milk that profit a little bit more. And then let that go. But other than that, let's see, news-wise, there is some dollar news, just advanced GDP. So that's not, well, it just depends. That's not the official GDP number, but I think people do regard that quite a bit, and people are paying attention a lot more to the GDP. I didn't move my stop loss. It's weird. I came back and they were automatically pushed back to where I had them originally today. I need to move these back down. So yes, at this point, these cannot go all to break even. I had them, what was it, like 25 pips away or something like that. I had them there earlier, but yeah, let's just put all these. I'm going to put them right here. Just the break even of these trades right here. And then yes, we can have comfort to leave these trades tonight. I'm just going to have one down here just in case we get a nice little push lower. I'd like that. But yeah, you can bring those to break even at this point. There's no reason to have those in outer space. We're not actively managing this trade. The trade's essentially over. We did our job and it's off to the next trade, right? So yeah. Let's see. So news, so nothing with the dollar in the morning and nothing with the euro. And then I think we should be good to trade anything else. So, well, alrighty then. Appreciate your guys' attendance. Thanks for coming, and we'll see you guys in the morning.